Alright, hey guys, how's it going? In this video, I will be talking about the taxation system in US and Canada and how it's pretty much similar around the world. Now, before we get into this video, I'm not going to make it technical at all. A lot of people they're kind of intimidated by taxes, and I understand why. It's not the easiest of all subjects, and it's just really, really dry. Okay, so my aim is not to talk about trivialities which are not going to help you out. In this video, I'm just gonna help you understand how the tax system works, generally speaking, so you can use it to your benefit. And now, what benefit can you get out of understanding the tax system? Well, if you really, really understand it, the first thing you will get to know is that a high paying job is not the answer, because you end up paying a whole lot more in taxes and it kind of defeats the purpose, right? Secondly, it will help you understand that ways to save money, okay? In other words, legal ways to pay the government less, all right? And the third reason why understanding the tax system will help you out is because you will keep paying tax your entire life, pretty much, or at least 40 to 50 years of your life in one shape or another. So it pays to understand what's happening when you get taxed and where does that money go, all that stuff. Okay, so let's get right into it. Now, this video is specifically for US and Canada, okay, but the same or similar taxation system is used around the world. So even if you're sitting in India or Pakistan or all these other countries, it's still gonna help you out, okay? Let's get started. In Canada and the US, we use a taxation system called progressive taxation system, which simply means that the more you earn, the more percentage of those earnings you have to pay in tax, right? Now, what most people think happens is that when they get a promotion and they get a higher pay, the entire part, all the 100% of the new pay gets taxed at a higher rate, and that's not the truth at all, okay? In Canada specifically, if I remember it right, there's one tax system from if you earn 0 to 14, I think 11 or $14,000, okay? Another tax percentage which works when you are earning between 11 to $25,000 per year. Another percentage kicks in when you're earning 25 to, I think, $43,000 per year or something. What I'm trying to say is that let's assume that you have a $60,000 job, okay? You get a promotion, and because you work really hard, you are now promoted and you earn a salary of $100,000 per year. Now, most people would think that, well, I'm in a totally new bracket, a higher bracket, so all of my $100,000 in income gets taxed at a higher percentage point, which is not the case, okay? Please understand that brackets have thresholds. That's why they're there. And that's what makes you, that's what taxes you, okay? Not the entire percentage. So as an example, let's assume again that you're making $100,000, okay? You get a certain percentage of tax on the first, $11,000 or $14,000, I can't remember exactly. And after that, another percentage kicks in from 11 to 25,000, another from 25 to 44,000, another from 44,000 to 88,000 or something similar, and another one from 88 to $125,000. Okay, so different portions of your income get taxed at different rates. This is very, very important to understand. Okay, now it's very similar in the US as well. Okay, another thing to consider is that the taxation system in these countries takes care of you irrespective of what kind of income you make. There are three types of income. The first is earned income, the second is portfolio income, and the third is passive income. When you earn a salary or trade your time for money, it's earned income, okay? And that's what most people earn, and that's why most people know just about earned income. Portfolio income is when you sell something for more than you bought it for, okay? For example, a house or a stock or a car, whatever it is, okay? And then you get taxed on the profits. Passive income is when you invest and you get income without trading your time for money. It could be a rental, rental real estate, stock, dividend stocks, a business in which you have a passive interest, royalties from a book that you wrote, all that stuff. So how you earn money is, it dictates how much tax you pay. So if you earn $100,000 in earned income at a job, then you're gonna pay the highest tax of all. It could range anywhere between 38%, 36% to 42%, depending on where you live. Okay. Now, if you earn the same income, $100,000 in income in passive income, then the tax rate should not be more than, I don't know, 5 to 13 or 14%. Now, I am making a huge generalization, but this usually holds true. Okay. I talk about why you get taxed at a higher rate in another video, so that's not the subject of this video, but please understand that most people don't know that there are 3 types of incomes. Most people think that if they have a high paying job, that they're rich, but that's not the case at all. The wealthy people, the truly rich, do not trade their time for money, and they do not work 9 to 5. Okay, this is very important to understand. Now, another way the tax code helps you is when you make contributions to RRSPs if you're in Canada, and 401ks if you're in the US. They're pretty much the same thing. They're retirement accounts, and I just don't like them at all. Okay, so if the public is doing it, even if everyone else is doing it, it doesn't make it right if it doesn't make sense, right? So the government will give you a tax cut when you contribute to RRSPs or 401ks, because they reason that, well, you're investing or saving for your retirement, so we want to make it easier for you. Okay, the problem is that this system is not going to work in the long term for one reason or another, and almost everyone can save money and put money away. It takes a lot more financial education to invest it to get consistent income out of it. So from a tax point of view, though, if you want to save money and if you want to get taxed less, one of the things you can do is contribute regularly to your retirement account. Okay, you will get taxed on it when you take out the money when you're 59 or 60 or 65 years old, but what the government thinks is, well, you will pay a lot less in taxes, because at that point, because you would have retired, you would be paying, you would have less income, and that's why you would be paying less tax. But the problem is, we don't want that to happen. You're watching these videos because by the time you're 50 or 60, you want to be a multimillionaire, right? So this does not apply to most of the people watching these videos. So while the government does give you an out, and they will tax you less if you contribute to RSPs or 401ks, I just don't like doing it that way. The other way you can kind of reduce your tax rate is, or get more money from the government, is if you have kids and if you just became a parent, or if you have kids between the ages of 0 to 6 or 7. So in that case, the government kind of subsidizes you and gives you a child benefit, which ranges between, I don't know, like $200 to $700 or $750 a month. Okay, depending on your actual income and how many dependents you have, how many children you have, all that stuff. The job of the taxation system in US and Canada, at least, is to make sure that no one really goes hungry. Okay, and I think they do a decent job at it, right? But the problem is that the taxation system, once again, does not touch the actually rich people, because you only pay taxes on your income and not on your assets, which means that you could have $1 billion worth of assets, but because they're not income, you pay 0 taxes on them for the most part. Okay, I know it sounds a little strange, but it really is the truth. Okay, that's why all these multimillionaires and billionaires, they have a huge net worth, but they don't end up paying a lot in taxes. Okay, but that's for another video. Now, if you are an employed individual, which makes 97 or 98% of the people around the world, there isn't a whole lot you can do in order to save taxes. The only thing you can do is stay in a lower tax bracket, which no one wants to do because everyone wants to make more money. Contribute to RRSPs or 401ks, which we just talked about. And by the way, I'm still going to maintain that they are never a good idea. And that's pretty much it. You can claim some credits and the government is going to reduce your tax rate, but that is so trivial that I don't even want to cover that in this video. But please understand and really figure out how taxes work in your area. Let's assume that you are sitting in Ontario in Canada. Okay, so all you have to do is go to Google and type in Ontario tax calculator. If you're in the US, in New York, you do the same thing, New York tax calculator. Then you play around with hundreds of tools that show up. Okay, just pick a tool, they're all free, put in some values, and you will understand what rate, what tax you will have to pay for that year. Okay, it's very, very simple. It just takes a little getting used to. So when I went to that tool, I just I just put in an earned income of, for example, $100,000, and it told me that I would pay $38,000 in taxes. Then I was like, okay, fine. On top of this $100,000 in earned income, let me put in $20,000 in dividend income, for example, eligible dividends. It gave me a new tax that I had to pay. And I kept doing it over the years, and now I have a very good understanding as to what I have to do to minimize my tax that I pay out and maximize the money, the income that I keep to myself. Okay. It takes a little bit of trial and error because there is no one solution for everyone. Okay, everyone's different. My income sources are probably going to be different from yours. But if you work somewhere, if you're an employee, this is really, really easy to understand. If you're a business owner, it's a little more complicated. But chances are you have a job, and it's pretty easy to figure out how taxes work. And I understand it's not sexy, or it's not really interesting to understand this stuff, but it's going to save you a lot of money in the long term. This channel is all about wealth creation and financial education. And if you want to really understand money, you have to understand the motivation behind the government, behind taxing people and corporations and businesses the way they are. There's a rhyme and reason to it. Okay? There's a reason why when you have passive income, you don't pay a lot in tax. And there's a reason why when you have a job, you pay a lot in tax. Okay, it's going to take you a couple of hours and a little bit of trial and error to figure out why that is the case. So yeah, please go ahead and do it. I suggest you doing it today because you're going to forget doing so. Because see, the thing is, we lead very busy lives, and if we start putting things off, then they never get done. Trust me, I've been there. Okay, so yeah, thank you once again for watching this video. I think I covered pretty much everything. And please like the video if you got information, value out of it, share it. And best of all, subscribe to my YouTube channel. I mean, I create these videos for you. I already know all this information. I just wanted to share it for free with the world. And if it brightens your day, if it makes you think in a different manner, then my job here is pretty much done. Okay? So thank you once again, and I will see you in another video. Take care.